Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Saving Zelensky. European leaders pledged to increase defense spending and support Ukraine after talks between President Trump and President Zelensky collapsed. Chinese stock investors facing a pivotal week with high hopes the National People's Congress, the NPC, may deliver further stimulus to counter U.S. tariffs. And the Kurdish separatist group PKK has announced a ceasefire in response to a call by its imprisoned leader to lay down arms and bring an end to a 40-year war with Turkey. It's just gone 8:30 a.m. across the Emirates. I'm Johanna Versace in Dubai. So much news politically, geopolitically, and of course markets-wise as well. We're gearing up for a major week. Wednesday is NPC, the beginning of the NPC. We're going to talk more about that in a moment. But of course, tomorrow is the deadline for those tariffs that President Trump has been teasing. New tariffs on Canada and Mexico, and an additional 10% tariffs on China too. So that could happen in the next 24 hours. And then don't forget, you've got important data to watch out for, payrolls on Friday, and the ECB meeting in Europe on Thursday. So all of that happening this week. But markets brushing off some of those geopolitical concerns. S&P futures just below 6,000 here, but leaning towards the green, up 0.1%. S&P back to tracking positive for the year now. Asia Pacific handover pretty positive as well, up 0.7%. European futures also surprisingly opening up in the green as well as we head into the European sessions. And we're piecing together what we learned from that Starmer summit on Ukraine yesterday. And in Euro also having a good session today too. So surprisingly, a lot of green on the board. Let's switch over a brief peek at NPC and one of the metrics that we could watch out for. I thought this chart was interesting because China has set a CPI target of above 3% since 2004. And guess what? We've consistently undershot that, going all the way back to, well, you can go all the way back the past 10, 15 years, and we haven't really got to that 3% target. So many in the analyst community think they're going to have to revise that target lower to perhaps 2%. But of course, with CPI tracking below 1%, even that 2% target seems to be unachievable at this point. So to talk more about this, very happy to say that Min Min is going to be joining us. China's annual National People's Congress will be opening this week, but the tariffs also is going to be a big theme weighing on people's minds. Bloomberg's China correspondent Min Min Lo is in Beijing, and she joins us now from Beijing. So just give us a sense of what to expect out of the NPC.
Yeah, so we have the tariffs, the additional 10% kicking in tomorrow, midnight U.S. time, which is 1 p.m. Beijing time. That's when we want to look out, keep our eyes peeled for any news lines from China, because I believe that's when Beijing will likely respond with their own announcement of the countermeasures to the additional 10% tariffs, possibly targeting U.S. agricultural goods, for example, if what state media editorial has said is anything to go by. And with regards to the NPC, you showed that chart earlier. It's interesting you talked about that inflation number, because the target of 2% that analysts are expecting this time, that's largely viewed as a ceiling rather than a floor. That's why China hasn't always reached their inflation target in the past. Last year was 3%. We were far away from that. And again, they are lowering that possibly this year because we have been in this deflationary streak. We're quite far away from reaching that target, to be honest, and it's still the growth target that is the most important priority for the government, and we're expecting the government to set a 5% target this year as well. We're also closely watching the deficit target this year, expected to increase from the current 3% to between 3.8 or 4%, so pumping in more trillions of yuans into the economy to address some of the persistent challenges like the property crisis, the domestic consumption, and of course to build up the resilience amid these external challenges.
Right, so we talk growth target, deficit target, but how likely is it that the threat of the tariffs, or indeed by tomorrow, maybe it will be a fait accompli, is going to change the calculus of what's on deck at this week's NPC?
Definitely, the tariffs are going to factor into policymakers' consideration when it comes to what sort of stimulus they will put out next year. But some analysts think it will not necessarily move the budget so much. The budget, of course, is something that policymakers think about and pore over for weeks, and it may already be set in stone by this time. But also, we spoke to David Lee Dao-Kui on the China show earlier, and he was saying tariffs is not even going to make it into the top 3 issues that policymakers are thinking about. Their most important and urgent priority is about boosting domestic consumption. How they are going to do that, of course, other priorities including continuing to foster that capacity for innovation from Chinese companies and solving some of the problems in the economy, the fundamental issues, the overcapacity, to try to facilitate this modest increase in prices. And to that end, we have seen how Chinese authorities have been pretty reluctant to overstimulate the economy because they're at this point still cleaning up the messes from previous years, the property crisis, the over-leveraging by local governments, the bubble that has formed in the property sector. So they don't want to overstimulate. They have more or less adopted this sort of wait-and-see approach. They put out a little bit of stimulus and then check if it's taking hold and then put out a little bit more if it's needed down the line.
Yeah. Sort of a drip-feed approach to fiscal stimulus. Bloomberg's China correspondent Min Min Lo, thank you so much for the overview as we head into a very important meeting this week. Now, Ukrainian President Volodymyr Zelenskiy says he is willing to meet President Trump again, if invited, to, quote, solve real problems. The two leaders had a disastrous meeting on Friday in the Oval Office, leaving Western European governments scrambling to show support for Ukraine as the UK Prime Minister hosted a summit in London. Joining us for more is Bloomberg senior reporter in Dubai, Henry Meyer. So much to talk about. Maybe let's just start with the state of the relationship between President Trump and President Zelensky. We all saw what happened on Friday. We've had a couple of days to digest it. European leaders obviously trying to mend the rift that has opened up between the two. How likely is it that we could see a reconciliation of sorts between Zelensky and Trump in order to perhaps be able to proceed with what happens next vis-a-vis the ceasefire?
I think at this stage it looks quite unlikely. President Zelensky, in his comments at the weekend, said that he wants to go back. He's ready to go back to the White House, but he doesn't seem ready to give the apology that has been demanded of him. He said that he was ready for equal dialogue. I mean, of course, he got a great reception in London from the UK Prime Minister Keir Starmer, from European leaders, and he must have felt like old times. But the situation has changed completely with the new president in the United States. You have senior American officials openly calling for a change of leadership in Ukraine, such as National Security Advisor Mike Waltz. So I would say that at this stage, it does not look likely that the current Ukrainian leadership, President Zelensky, will manage to reestablish a rapport with Trump. However, of course, Ukraine will be included going forward in these negotiations, and there's definitely, Europe is doing its best to try and bridge that gap.
Yeah, I mean, there were loads of articles over the weekend talking about how the relationship between President Trump and Zelensky precedes this current war, going all the way back to 2019, that phone call that they had that later led to Trump's indictment. So there's a lot of history there between the two. But let me just bring it back to the summit that was held in the UK over the weekend. How likely is it that these European efforts to build up a security guarantee for Ukraine will actually get Washington on side?
There, actually, I'm a bit more optimistic. I mean, I think that what Trump wants from European allies is to come up with a concrete plan for deploying peacekeepers. Now, Russia is completely opposed to that. However, Trump has said that he supports European boots on the ground. He wants Europe to take responsibility for this situation. One of the main points of discord has been that Trump is refusing to provide a security backstop. Keir Starmer went to Washington last week. He tried to get that. Trump refused. I think the U.S. could provide logistical support for such a mission, reconnaissance, but they are not going to guarantee to intervene in case these troops come under attack. So if Europe is willing, given that condition is not going to change, to come up with a viable plan for a peacekeeping mission, then I think they will get American support.
Interesting. Okay, so there is hope on that front. Bloomberg senior reporter in Dubai, Henry Meyer, thank you so much for the latest. Now, Saudi Arabia's sovereign wealth fund and its portfolio companies have embarked on an acquisition spree spanning sectors from agriculture to gaming. The $925 billion public investment fund is the main driver of the kingdom's economic transformation plan as Riyadh tries to boost local development. Now, to tell us more, we're joined now by Matthew Martin, Bloomberg senior reporter for Middle East wealth funds. Matthew, good to have you with us. So there's been a flurry of investments from the PIF over the last couple of months. How should we interpret it, and how do these investments align with Saudi 2030?
Yeah, good morning. Well, look, I mean, I think that's sort of kind of the key question around all of this. And, you know, I was in FII, the Saudi Investment Conference in Miami a couple of weeks ago. And, you know, the big theme then was that it's getting harder and harder to get money out of the PIF for big global deals. And then we've seen this sort of flurry of announcements. So, you know, I think the way that we should look at this is that what we're seeing the PIF doing with these is that where there are opportunities to spend money internationally that bring companies back to Saudi Arabia to work on the economic diversification, on those Vision 2030 projects, then there is still money around. If there are international deals which are just about financial returns, you're going to see less and less of that, whereas you know, these deals which we've seen over the past couple of weeks, like the investment in DAZN, for example, the sports streaming service, that's all about linking into Saudi Arabia's sports strategy. So although it's money going out, a lot of the goal is about promoting Saudi Arabia, promoting the World Cup that's going to be in Saudi, promoting the Saudi Football League. So it all does link into going back to the Saudi economy and driving things there, even though it begins with money leaving the country. The big challenge, of course, is going to be, can they transform all of that investment into long-term investments which make returns for the country and that do achieve in diversifying the economy?
Yeah, you mentioned DAZN, the investment going into sports, but what are some of the other key industries that the fund will continue putting money into?
Yeah, I think if we look at what we've seen over the past couple of weeks, I would put them broadly into two main buckets. Excuse me. First of all, you've got one of them which is related to sports and sort of social development, and so we can put things like DAZN in there, put things like the planned investment into Niantic, the video gaming platform. That all sort of links back into creating and developing those industries back in Saudi Arabia and improving the quality of life and giving citizens of the country more and more to do. The other bit of it, which I would sort of broadly call manufacturing, is this investment, which I think you have up on the screens now, of Alat, this electronics manufacturing company that PIF created, investing into TK Elevator, and part of that is to get them to then come back to Saudi Arabia and create this manufacturing hub. We've also reported that they are in talks with Leonardo, the defense company, to build an aerospace facility inside Saudi Arabia. So that, again, is about, you know, building up those manufacturing capabilities inside the country and diversifying non-oil exports, which is a big focus I think we'll see from the kingdom over the next couple of years.
Yeah, Matthew, thank you so much for the reporting. As ever, Matthew Martin, Bloomberg senior reporter for Middle East wealth funds. Thank you very much. And for more of our Middle East money coverage, do not forget to subscribe to our weekly newsletter on Bloomberg.com. It comes out every Monday around 4 p.m. local time. Now, coming up, Ghana's new central bank chief has suspended the Western African nations program of paying for oil with gold. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Ghana's new central bank governor has suspended the West African nations program of paying for oil with gold. Johnson Asiama is also vowing to implement clear policies to curb inflation, which has been above 20% for nearly 3 years.
See some a pickup in terms of investor sentiments, even for our local bonds, which is a good sign. And so it is time to rebuild, once again. It is time to look at, for example, the capital markets master plan, which was put in place around 2020. We intend to see how to put life, back into the financial markets in general.
Joining us now for more is Bloomberg's Ndiro Ganga, who spoke to the central bank chief. Great Gat. I was taking a look at the Ghanaian currency, the cedi, the last couple of years. It has been on a path of both volatility and a slow devaluation as well. What do we know and what did we learn about the central bank's plan to manage some of this currency volatility?
Hi, Jumana. So the central bank governor says that they're going to do this in twofold. One is maintaining an appropriate monetary policy stance. In the last meeting, we saw them hold the rate at 27%, but also working hand in hand with the John Dramani Mahama to ensure fiscal discipline from the executive side. During the first State of the Nation address by President John Dramani Mahama, he said that the currency lost 19% of its value to the dollar in 2024. And this year alone, 2025, since January, it has lost 5%. And while talking to the governor, I put it to him and asked, is this normal depreciation, or is there a need to manage and stabilize the currency? Because 5% in a span of less than 60 days should be something that should raise an eyebrow. And the governor said that they intend to put in place measures to manage this depreciation, but he says that this year the cedi will avoid extreme volatilities. Another thing that they intend to do is also step away from instruments that were used by the previous administration to manage currency volatility, one of them being the gold for oil program, where the central bank would buy gold bars using the local currency and then barter it for oil. Governor Asiama says that they've recorded losses on that, they've incurred losses, and they have put that on hold. Another key area of priority is inflation. In January, it hit 23.5%. But the governor is optimistic that by the second quarter of 2026, they will be in the single-digit realm within the central bank target of 6 to 10%. And he says how they're going to do that is put in place better fiscal coordination mechanisms to help ease inflation. Another really interesting thing that came up during this interview is the fact that in 2022, the bank recorded an overrun in spending of $3.9 billion because they had to write down loans in order to qualify for an IMF bailout program of $3 billion. He says that this year they're not going to incur any losses because they're managing their expenses a little bit better.
Yeah, interesting. Ndiro, also I want to tie back to what you were saying about inflation and the central bank governor's expectations of where inflation is headed. How could that tie back in to the interest rate picture? Because they attempted to start cutting interest rates, but of course they've had to be cautious given that inflation is still running north of 20%.
Absolutely, Jumana, and that's why he's giving it a really decent time span from now to the second quarter of 2026 so they can manage how inflation goes. A lot of their pressure comes from food inflation and also the currency. If the currency is not doing well, if they're not getting good receipts from tourism, if they're not getting good receipts from cocoa, if they're not getting good returns from oil, particularly due to volatility at the international market, then it means that they'll have a lot of pressure internally. There'll be trade imbalance. And Ghana is a country that heavily imports things that are dollar intensive, like machinery, like chemicals. So they're going to use this period between now and the second quarter of 2026 to monitor how inflation is, to monitor food, to monitor dollar inflows in the country, and then maybe begin their easing cycle. But in the meantime, they're going to be very cautiously optimistic, probably likely to hold in the next meeting as they see how things unfold.
Yeah, interesting. Bloomberg's Ndiro Ganga, thank you so much, and thank you for bringing us the stories on Ghana the last couple of days. Now, coming up, a Kurdish separatist group has declared a historic ceasefire with Turkey. More on what this means for the wider region next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The Kurdistan Workers' Party has announced a ceasefire in response to a call by its imprisoned leader to lay down arms and work towards ending a 40-year war against Turkey. But the PKK says it will only do so if Abdullah Öcalan is allowed to personally guide and conduct its disarming and disbandment. Now, let's bring in Honor Ant, Bloomberg's managing editor for Middle East and North Africa. On Friday, when we spoke about this, we said we were leading into potentially interesting and significant weekends for the future of PKK and its potential for military disarmament. Yeah. What did we learn in the last 24 hours?
What we were looking forward to, or what we needed to find out over the weekend, was whether or not PKK would respond to this call by its symbolic leader, Abdullah Öcalan, in a positive way. It did, but as you said, there are some missing elements, and that is the fact that now PKK wants Abdullah Öcalan to personally guide, or let's say lead, the process of laying down arms, the convention that the PKK is supposed to convene. But that's going to be tricky because right now Abdullah Öcalan is on an island prison just off Istanbul. He has been there for 25 years. And it would cause a huge backlash if Turkey just decided to free him. Even a house arrest would really result in a huge public backlash, which probably President Erdogan would not want to face, given that it would result in a dip in his popularity.
So it feels as though they've almost announced a unilateral ceasefire, which means you don't have the other side on board just yet. What is the likelihood of this plan actually succeeding?
I mean, unilateral ceasefire, it had to be a unilateral ceasefire, right? Because no sovereign would really agree to a ceasefire with a group that it considers as terrorist. The PKK is considered to be a terrorist organization for Turkish government, and that's the end of it. But clearly, just like as in the past, when the PKK says, I'm not going to fight, usually what happens is Turkish forces also refrain from combat. And if that is the case, and it probably will be, just judging by the political statements and the political support for this process, what will happen is there is going to be a cessation of hostilities until the PKK basically convenes and makes a formal decision to lay down arms and basically abolish itself, which is what Abdullah Öcalan called for last week. But as I said, there is some distance between where we stand now and the point where it might happen.
What did the PKK get out of this then? What concessions are they looking for in theory?
Well, they say the call by Öcalan was not the end of something, but was not the beginning of a new era. I think what they were trying to say is that as a result of this process, they think they will get, they will make some headway in their long struggle to get more rights for Kurdish minority. Now, what exactly that results in reality is going to be a function of time and political decisions, and really, there's a huge difference in the political environment in Turkey between 1970s when PKK was formed and here, right? The demands, some of the demands are not valid anymore, but they do look for things like the right to education in mother tongue, mother language. That's one of the things.
Yeah. Honor, thank you so much. Good to have you with us today. Honor Ant, Bloomberg's managing editor for Middle East and North Africa. Now, a look at equity futures, because we seem to be trading in the green despite this big weekend of news, geopolitics, and of course that meeting that took place at the Oval Office on Friday. Heading into the second hour now, Jennifer Zabazaja will be joining me. We'll be back in just a few minutes. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Saving Zelensky. European leaders pledge to increase defense spending and support Ukraine after talks between President Trump and President Zelensky collapsed. 8 trucks head back to Egypt after Israel halted all humanitarian support and imports to the Strip over Hamas's rejection of a U.S. proposal to extend the ceasefire. And markets are counting down to Trump's barrage of tariffs on Canada, Mexico, and China, which take effect tomorrow. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Johanna Versace in Dubai.
And I'm Jennifer Zabazaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And Jumana, it was the meeting that was heard around the world, really affecting everyone, still having an impact on markets and geopolitically, but also a big week ahead for investors.
Yeah, I mean, I don't even know where to start, Jen. There was so much news to digest over the weekend. The world is still reeling from that Oval Office showdown on Friday. But of course, the European leaders did their best to help bring down the temperature on the situation. We are going to talk about what happens next for Ukraine. But interestingly enough, markets seem to be brushing off some of those geopolitical concerns. Because take a look, S&P futures are up 15 basis points. And actually, on Friday, we were talking about the fact that for the year, S&P had gone into negative. But we're back in positive territory again after a positive close on Friday. That PCE number coming in line with expectations. Looking ahead, Jen mentioned some data to watch out for. Well, there's a lot to watch out for this week. Tomorrow is the tariff deadline. Wednesday, we've got the China NPC meeting. Thursday, we've got the ECB meeting. And then Friday, we've got those payrolls numbers to get through. So busy week coming up on the data front. The handover today, though, positive from Asia, up 0.8%. European futures also leaning towards the green, up 0.5%. And even the euro currency itself also gaining a bit of ground versus the USD today as well. What else is doing well? Well, flip over. It's been a really good weekend for crypto. Take a look at the price action in Bitcoin. It's back up to around $93,000. Only a few days ago, it was trading through at $80,000, around $78,000, I think, was the low we got to. And all of this on more comments out of President Trump that he was looking to start up a strategic digital assets reserve, is what he's calling. And in that will be Bitcoin, Ether, Solana, some of the other cryptocurrencies as well. So all of that has been taken, of course, well by the cryptocurrency community. And apparently there is going to be a crypto summit, so to speak, towards the end of this week, as though this week wasn't busy enough already. So that's the picture for Bitcoin, in case you're wondering why there's a bit of a rebound. But let's go back to Asian markets. The handover is positive today. And Avril, of course, investors are looking ahead to that NPC meeting this week.
Yeah, positive handover, but don't forget, on Friday, the region's benchmark lost the most since the August carry trade unwind. And of course, last week, it was about tariffs, it was about tech. This Monday, it looks like that optimism surrounding the Fed rate cuts, even though you're seeing dollar China firmer, given how the dollar bears seem to be creeping back in, it does make you wonder how much this will last. Aside from that, when Chinese stocks and you're seeing this rebound underway, it's also got to do with some of the data that came out over the weekend and this morning as well that show resilience in factory activity. Today, the private survey of Tyson Manufacturing showing that bit of a pickup. Now, aside from that, as you say, it's going to be about the Chinese NPC later in the week. The view that seems to be emerging from observers is that this is a meeting that has a tendency to underwhelm, but maybe this time around will be a bit different given the threat of tariffs and how that might prompt authorities to act.
Yeah, though, good day today, though. Avril Hong in Singapore, thank you. Now, Ukrainian President Volodymyr Zelenskiy says he is willing to meet President Trump again if invited to, quote, solve real problems. The two leaders had a disastrous meeting on Friday in the Oval Office, leaving Western European governments scrambling to show support for Ukraine as the UK Prime Minister hosted a summit in London. Joining us now to discuss is Bloomberg's Russia economy and government editor Greg Sullivan. Okay, first of all, let's just start with the fact that Zelensky is now saying that he would actually have another meeting with President Trump. But of course, debatable whether President Trump wants to have another meeting with Zelensky. And there was loads of press over the weekend about how the relationship between those two goes all the way back to 2019, that infamous phone call that took place, right? So there's a lot of history between the two sides. How likely is it at this point that the rift can be mended?
That is a really good question. I mean, as you said, there's no doubt that that was a very bad meeting for Zelensky. The two already have a lot of history. They've never been particularly friendly with each other. And the meeting put Zelensky in a very, very tough spot. The U.S. has been a critical backer for Ukraine, and there's a lot of doubt about whether that support will continue going forward. Now, for Zelensky, he sees this resource deal as something Trump wants, a potential way to re-engage, to keep him from completely breaking off the relationship and completely aligning with Putin and Russia at the expense of Ukrainian interests. Whether another meeting actually happens, it's hard to see that happening from here, but anything is possible with Trump.
So how viable is it for Ukraine to be able to continue the war in the case that the U.S. decide to cease providing military and economic support?
Well, it will definitely be a lot harder for Ukraine. Ukraine has relied on U.S. support, U.S. Ordnance to wage this fight, U.S. intelligence. But Ukraine will be able to keep fighting. For how long is a question for analysts. It's unclear how long they can sustain the fight. It is an existential fight for them. Europe is definitely trying to step up. We saw that on Sunday to fill in part of the gap. And they also have been providing a lot of support to Ukraine.
Yeah, so it was interesting that Keir Starmer, the UK Prime Minister, was talking about building a so-called coalition of the willing. And it seems as though at this point, UK and France are the only countries that are willing to provide peacekeepers and troops to Ukraine on the ground. How likely is it that, assuming some of the European leaders are able to bring down the temperature and re-engage back with President Trump, that we also may see some support, those so-called coveted security guarantees coming from the U.S. as well?
Well, the U.S. for now has really ruled out putting boots on the ground. But as you said, the U.K. and the French are leading that discussion, and they've both been clear that it's not going to work without U.S. support. And at some point, the U.S. will need to provide a backing. For now, the line out of the Trump White House is, first we need a peace deal, and then we'll talk about that. And it's also important to note that for now, the Russians have been excluding that as a possibility. Over the weekend, we heard from Foreign Minister Lavrov saying that it was actually insolence, this idea of putting European peacekeepers in Ukrainian territory. So it's still a big question mark over the whole deal.
So potentially a non-starter for Russia, which, of course, is very important to getting any ceasefire deal across the line. Still many hurdles to get through. Bloomberg's Russia economy and government editor, Greg Sullivan, thank you.
Now, Israel says it's blocking all humanitarian aid to Gaza after the first stage of the ceasefire expired on Sunday. It comes after Hamas rejected a U.S.-led proposal to extend the truce until mid-April. Both Saudi Arabia and Egypt have criticized the Israeli move and say aid should not be used as a weapon for, quote, collective punishment. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, Egypt, Qatar, we mentioned a lot of mediators really criticizing this decision. What was behind it?
Well, as you noted, this Gaza crisis, 16 months in, reached another crisis juncture over the weekend when the initial 6-week truce that had been agreed by the side did not lead into envisaged phase 2 arrangements. That's basically because Israel and Hamas have not agreed on the core terms of that phase 2. There was really nowhere to go, and it appears that the Americans decided to bridge that gap, hopefully to put off a potential resumption of the war with the end of the truce by proposing an entirely new truce of their own, which would have been another short-term one geared to span the Muslim Ramadan fast month and the Jewish holiday of Passover coming up after, and basically giving more breathing space to the sides, in which the Americans envisaged it, according to Israel, more hostages would be released, more Palestinian prisoners, more humanitarian aid brought in. Now, Hamas has insisted on phase 2. It rejects some core Israeli terms for phase 2, and it has therefore rejected this idea of an interim bridging truce. Israel's response appears to have been to amp up the pressure by saying, fine, no more humanitarian aid. Israel controls the borders. And what we're seeing now is the reaction of some core Arab players. Those two countries, as you noted, have been critical in mediating between the sides. There's no direct contact between them. These are not peace talks. These are very much transactional truce talks, and they're signaling that they may be getting fed up with the entire arrangement. So right now we're seeing effectively a game of chicken between Israel and Hamas, with humanitarian aid and the fate of the remaining Israeli hostages in Gaza really being caught in the middle of that.
And Dan, Israel has decided to stand quite firm in its decision to defend Syria's Druze from some of the other gunmen who we've seen in the country. What is happening there? Why is Netanyahu so adamant on defending this part of the region?
Well, what we're seeing with Israel's conduct in Syria is really coextensive with the lessons Israel says it's applying as a result of the October 7th attack in 2023 by Hamas, this blindsiding cross-border attack that Israel simply failed to anticipate or prevent. It is now creating buffer zones wherever it can with potential enemies. It has been not especially happy about the new regime in Syria, the one to replace the 50-year regime of the Assad family, given the al-Qaeda roots of the new leadership there. And it has also been extending an arm to Druze. This is a significant minority in Syria. They also have a presence in Israel. They're a very loyal minority in Israel. And Israel's official position is those Druze in southern Syria, natural allies of ours, and we will not see them fall victim to sectarian persecution within Syria. What makes this Israeli pledge potentially to send in Israeli forces to help the Druze of Jeramana is that Jeramana is basically a district south of Damascus, the Syrian capital, very much deep into Syria. So Israel is really saying it's willing to weigh in deeply into post-Assad Syria, more deeply than it has already, and it's already quite deep into the country. So I think for now that has yet to play out, but there's definite messaging to the new people in charge in Damascus that Israel is not only being diplomatically standoffish, it's willing to take up arms if necessary.
Right. We'll continue to watch this story, as we know you will, too. Bloomberg's Dan Williams in Jerusalem. Dan, always great to have you on the show. Thanks so much. Now, still ahead, we'll get the market outlook with Manulife Investment Management as investors count down to Trump's barrage of tariffs while weighing geopolitical developments in Europe. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Markets are counting down to Trump's barrage of tariffs on Canada, Mexico and China, which take effect on Tuesday. Meanwhile, traders are also watching developments in Europe, where leaders have pledged to increase defense spending and support Ukraine. Joining us now is Marc Franklin, Deputy Head of Multi-Asset Solutions for Asia at Manulife Investment Management. Well, there's a lot on deck this week in terms of geopolitical news to digest and all of the events coming up from NPC to ECB to the payrolls figures on Friday. But of course, the main one tomorrow is this tariffs deadline. And I just wonder why markets seem to be quite complacent into the deadline and the potential imposition of tariffs on Canada, Mexico, and another 10% tariffs on China.
Good morning. It seems to be the case that markets are anticipating, whilst there might be initial announcements, there's also the prospect of rollbacks or dialing back the rhetoric subject to responses from those trading partners. So for the time being, markets do appear sanguine. But at the same time as well, it's not entirely clear what the economic and the pricing impacts would be on the imposition of tariffs, the extent to which exporters or the producers of the goods pass on those tariffs underlying cutting prices, or whether the end consumers pay the full price increase as a result of tariffs as well. So it will take a bit of time for the data to reflect any tariffs that get increased as a result of these bilateral discussions, and for the market to adequately price in what its implications are for the economic outlook, but also monetary policy settings.
Yeah, have you advised clients to stay clear of any particular sectors because of the risk of tariffs?
At a high level, our guidance to clients since the start of this year is to recognise that we're likely to move into a more persistently volatile period for markets across risk assets. And as a result, we need to adopt a more selective approach, taking increased exposure in those asset classes which have quite attractive risk premia, and starting to cycle away from those asset classes that have had strong runs in recent times that might not be discounting in much more upside in the short term. So it's about a case of reorienting portfolios towards catch-up type opportunities or mean reversion type positions.
When we talk about catch-up, Mark, China's NPC meeting, Jumana was mentioning that in the intro. We had our reporter, Avro Hong, saying that this meeting tends to underwhelm. You, though, expect something a little bit more. Give us your outlook.
We do expect that there'll be some focused attention around recapitalisation of banks, shoring up the real estate market or attempts to do so. But the really important focus will be on direct stimulus towards consumers, the households, which has been somewhat patchy in detail so far. But for example, trade-in programs or incentive schemes for front-loading purchase as well, those kinds of measures in scale will be quite important for the market to focus on. One of the things that we've done in portfolios at Manulife in recent months is we've taken a more tactically overweight position in Hong Kong and China stocks, But we're starting to rotate that exposure into onshore exposures because the onshore market has effectively lagged the offshore market, which is a reflection to say that maybe onshore domestic investors have slightly more modest expectations of the NPC, whereas offshore markets have had this strong rally so far. And so on a reverse engineered basis, expectations going into the NPC are a little bit higher. So go back to the earlier point that you want to be positioning into asset classes with still quite attractive risk premia, rather than those that have fully discounted a positive scenario.
Would that include, Mark, in your opinion, tech, Chinese tech?
Certainly, yes. One of the things that we really paid attention to in the last couple of weeks was the forum that Xi Jinping and the CCP held with some of the leading figures in the private sector, particularly the technology companies in China. And I think it was a message that was being sent to global investors and global watchers as well to acknowledge the importance of innovation and the private sector in working hand in hand with the government towards innovation and self-sufficiency in some of the more value-added technological industries in China and to make them more reliant on domestic innovation. It was a recognition that there had been some persistent concerns around the extent to which the private sector would be enabled going forward. But the message was very, very clear. It was that we will permit private sector enterprises to scale up and to become very, very successful first before seeking to effectively adopt national service and make that innovation and technology available to the government and to the central policymakers in China. So that was a welcome shift in tone. And as a result, we do think that the technology sector in China will see a persistent bid because there's been a significant valuation discount to US tech companies for some time.
Yeah, and certainly that's been playing out at the beginning of this year. Let me just end with a point on the US. The last couple of weeks have been characterized by people getting concerned about the direction of travel for the U.S. economy. There's some serious growth concerns popping up, and certainly some of the indicators that have come through have disappointed to the downside. How pivotal do you think this payrolls number on Friday is going to be?
It's going to be quite important because we saw in the initial jobless claims last week a bit of a tick up. And so the conjecture is that that is the early reflection of some of the cutbacks or attempted cutbacks in federal government spending, as a result, federal government payrolls. And therefore, the question will be, can the private sector offset any job losses in the public sector? So our view would be that bonds will trade in a wide range this year. Early on, you will see some growth moderation get priced into bond markets as a result of this attempted pivoting away from the public sector as being the principal driver of job creation towards the private sector. But what you're likely to see from a sequencing perspective is softening of jobs in the public sector before the private sector starts to push ahead as well. So initially, growth moderation in terms of expectations, but perhaps later on in the year, a reignition of growth expectations as the private sector takes up the mantle.
Interesting. Mark, great to have you on with us today. Marc Franklin, Deputy Head of Multi-Asset Solutions for Asia at Manulife Investment Management. Now, coming up, Ghana's new central bank chief is vowing to implement clear policies to curb inflation. We'll bring you the story next. This is Bloomberg.
It is still relatively high, but we think that the downward trend that we started seeing since last year or so is well on course. The last reading came in a little bit, higher. But we think that going forward, if you look at the causes, of the pressures, the inflationary pressures, it was mainly from, food inflation. It was mainly structural in nature. And so therefore, the coming budget statement, which is about to be presented on the 10th of March, should be presenting a number of measures that can contain food inflation. If that is done, we are sure that we will see a return to the disinflation path. We plan to hold the next monetary policy meeting next month, where we will reassess the conditions and take an appropriate decision. And therefore, once we have the appropriate monetary policy stance in place, and then also food price inflation is well controlled, we will begin to see inflation trending back to its target path. We have a monetary policy consultation clause with the IMF, and so we expect that inflation should settle very much within, the band for end of the year. Barring again, I keep using the word barring any further shocks, because we have a number of shocks from the administered prices that get into the way. So we can also only talk about the forecast horizon in terms of when and how we will get there. As we sit currently, we are looking at, middle of 2026, we should settle within within 6 to 10%. For that one, that is what our assessment, indicates at this point in time.
And do you have any plans of reviewing the Foreign Exchange Act? And if so, what in the law will you be exploring to change? And how will this in turn affect the exchange rate?
So I made mention of the plans to introduce a new Foreign Exchange Act. The reason being that the act in place currently is quite an old one. It's an act that was passed in 2006, thereabout. A lot has happened since then. There's been several notices that have been published since then. There's been, new developments, fintechs and virtual assets and what have you. So the idea is to have a new law that is able to cover all these new developments, a new law that's able to take out all the inconsistencies to do with our notices, a new law that provides clarity to the markets.
This is Horizons Middle East and Africa. Our top stories this morning. Saving Zelensky. European leaders pledge to increase defense spending and support Ukraine after talks between Trump and President Zelensky collapsed. Chinese stock investors facing a pivotal week with high hopes the National People's Congress may deliver further stimulus to counter U.S. tariffs. And Bloomberg has learned Saudi's public investment fund has temporarily banned PwC from advisory and consulting service contracts. We are live in Riyadh. But for now, it has just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Johanna Basachi in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. No shortage of headlines to wade our way through this morning, Jen. But of course, not a great weekend for President Zelensky, starting off with that, train wreck of a meeting with President Trump on Friday. Things look to get better by Sunday with the UK summit. But of course, big questions remain about the future of Ukraine and those peace talks.
Yeah, and everyone, depending on who you talk to, has a different take on who did what and how did it actually derail. But it is a big week, as you were mentioning, Jumana, there. We do have a number of things that we're focusing on. Geopolitics, of course, is front and center, but we're waiting for that China NPC meeting, as we were just talking about there. And then, of course, a few other data points that we'll get later in the week, including, of course, from labor market data from the U.S. and some others. There's also the ECB that we're waiting for. But let's just take a look at where markets are positioned ahead of the trading day. As Jumana was mentioning there, a lot for markets to digest. And it's only Monday morning, at least here in South Africa. But as you can see, S&P futures edging up about just 0.2% there. Again, waiting to see what the outcome is of these Trump tariffs that is set to start on Tuesday. But the S&P closing last week in negative territory for the second week in a row. So we'll see how that pans out. The euro up just about 0.4%, strengthening against the dollar as we are seeing more and more European leaders rushing to offer support to Ukraine. We're seeing the euro, it's actually up about 3% from its February low against the dollar, even as the bloc is still waiting to see the outcome of tariffs. I was speaking to a number of finance ministers from Europe last week about that here in South Africa. And if we just stick with European Forex, if we take a look at the Polish zloty, we're seeing a few of these other currencies advancing as well as the expectation for more defense spending potentially fuels growth in the region. The dollar is down right now, just about 0.8% against the zloty, as you can see there. And Bitcoin also in focus, trading lower after a weekend surge. We did get news over the weekend from Trump potentially planning to reveal a crypto strategic reserve. We're not sure what exactly that means because he didn't give too many details. But the question is, how will that affect Bitcoin? Clearly having an effect on that right now. And I want to just bring you this terminal chart because we are seeing a lot of focus on the dollar. And as there is more and more focus, more and more dollar bears appear to be emerging. We did see the Bloomberg dollar spot index actually reach its peak when we first heard from Trump about tariffs against Canada and Mexico. But more and more investors appear to see weakness on the horizon amid more of these concerns about what a potential trade war means for the U.S. and then also potential signs of a cooling economy. We'll wait to get unemployment data later this week to see how that pans out. But that's just a look at what we're focusing on right now with the dollar. Let's just pivot back to another story we're focused closely on, and that is China's annual National People's Congress, It's opening later this week with the economy showing signs of momentum. But of course, Donald Trump's tariffs will test Beijing's ability to sustain that push. Let's bring in Bloomberg's China correspondent. That's Minmin Lo. She's joining us now from the Chinese capital. Minmin, what are the key takeaways that we should expect, if anything?
Well, I mean, first of all, the external environment that is confronting China is very uncertain now. Not only is the 10% tariffs, additional tariffs from the U.S. kicking in tomorrow, but we have Scott Bessent pressuring Canada and Mexico to match those U.S. levies in exchange for maybe lowering U.S. tariffs on those countries. So China could possibly be at risk of more tariffs from other countries besides the U.S. And the U.S. tariffs kicking in tomorrow, one day ahead of the NPC, I believe tomorrow, 1 p.m. when those tariffs kick in, we might see lines from Chinese state media around the announcements from China when it comes to the countermeasures China might take, possibly targeting U.S. agricultural goods, for example. And I'm just going to run through very quickly some of the economic targets we expect to hear on Wednesday when Premier Li Qiang delivers the government work report. There has been a lot of consensus and around the expectations from the NPC, and that's why it's going to be pretty hard for the authorities to give us any upside surprise, just given how much expectations there is. And broad consensus so far for economic target, growth target is around 5%. Inflation target expected to be reduced from the current 3% to 2%. But bear in mind, we're a long way from that target, so that inflation target likely seen as more of a ceiling rather than a floor. Deficit target expected to increase as well from the current 3% to around 3.8 or 4%, which could potentially make it the highest on record, which shows the intention of the government to pour in billions of yuan to support the economy and address some of the long-standing problems like the property sector, the weak consumption slump, and also to counter these tariffs and ensure that China has the ability to stop relying so much on export-driven growth to shore up the economy.
Minmin, is there anything that we could potentially be surprised by, or will Trump's tariffs likely overshadow any other announcements that we could potentially get?
Well, the Trump tariffs, some analysts are saying, are not even going to be the top priority for the Chinese government, given that China likely had already went through the scenario planning for up to 60% tariffs, which Trump had previously telegraphed when he was campaigning. So the tariffs actually came in below expectations. And some analysts that we have been speaking to are saying the top priority for the Chinese government is still about boosting consumption and addressing some of the risks in the economy right now, the overcapacity problems, to facilitate that modest increase in prices. And so that could be why they may be reluctant to overstimulate the economy, because they are now still cleaning up the mess that comes from overstimulation in the past and the over-leveraging of real estate developers and local government debt, cleaning that up as well. So they may still be quite modest in the way they deliver the stimulus this year.
Shaping up to be quite a busy week. Bloomberg's China correspondent Minmin Lo in Beijing. Minmin, thanks so much for joining us. Let's pivot back to Friday's disastrous Oval Office clash between U.S. President Donald Trump and Ukrainian Ukrainian President Volodymyr Zelenskiy. European leaders this weekend sought to assemble what Britain called a, quote, coalition of the willing to secure Ukraine after any U.S. brokered ceasefire. Our UK correspondent Lizzie Burden joins us now with more. Lizzie, so where does this meeting that we did see on Friday between Zelensky and Trump, and also the London summit that we got over the weekend, leave peace and potential peace in Ukraine?
Well, yeah, that press conference with Trump and Zelensky couldn't have gone any worse, Jen, and that's why the UK and France are in these talks about how they can get a peace deal and present it to President Trump to work through. But we had the US Director of National Intelligence, Tulsi Gabbard, over the weekend suggesting that Zelensky would need to apologise to President Trump publicly if he wanted the relationship to move forward. Zelensky, for his part, yesterday signalled that he would meet Trump if he were invited back. And then over the weekend, we had the UK's Keir Starmer, France's Emmanuel Macron and Italy's Giorgia Meloni trying to get the two men back to the table. They still believe there's a narrow path to getting a minerals deal over the line. And Macron told a French newspaper that some nations want a 1-month truce in Ukraine so that these talks about peacekeeping can play out. But indeed, it comes back to this question of whether the US is going to provide a security backstop. When Starmer was in Washington, all Trump would say is that he'll always be there if British troops were needing support. But under Article 5 of NATO, of course, members only commit to backing each other when one of their territories is attacked, not when a NATO member is backing a non-NATO member. So if British troops are peacekeeping in Ukraine, will the US actually be there? That is the ultimate point that Russia's Vladimir Putin is testing, and we don't have an answer. NATO Secretary-General Mark Rutte said yesterday that the London meeting shows the debate is ongoing on that question. Keir Starmer, his part, says that he's clear Trump wants a lasting peace. This US backstop is the absolute key to a lasting peace in Ukraine's mind.
And Lizzie, when we think about what Starmer calls a coalition of the willing, what would that look like? What would this coalition do? And would it actually guarantee, support for Ukraine?
Well, of course, your audience knows better than anyone the origins of this term. The most famous or infamous coalition of the willing was the 30 nations who backed the US in the invasion of Iraq in 2003. But this coalition of the willing is all about, number one, working out how Europe can defend itself without the US, and number two, how they can get the support together fast without everybody getting on board. So this is how Keir Starmer put it yesterday.
We are at a crossroads in history today. This is not a moment for more talk. It's time to act, time to step up and lead, and to unite around a new plan for a just and enduring peace.
So we know that there'll be France and one or two others, but there were only like-minded nations at this summit. There was no Hungary, no Slovakia, for example. We know that there are going to be internal domestic hurdles to get over. Now we look ahead to the Brussels summit on Thursday. And of course, we question still who will be the leader of Europe. Some saying that Angela Merkel should come out of retirement, some looking to King Charles.
I should say the speed in which these events are happening is quite astounding and historical. Bloomberg's Lizzie Burden for us in London, giving us a recap there. Lizzie, thanks so much for joining.
And over in the region, Saudi Aramco is set to report its fourth quarter results tomorrow. Bloomberg Intelligence estimates that the company's profit may have declined another 9% year over year, driven by a 10% lower benchmark oil price and, of course, lower production. This with oil output stuck at just below 9 million barrels a day amid sustained OPEC plus cuts. Anthony DePaula, Bloomberg's Middle East energy reporter, joins me now. Look, we can have a chat about where that profit figure is going to come through, but I'm going to be honest, I think what most people care about is what is going to be announced on the dividend. So walk us through what you're expecting there.
Yeah, I mean, that dividend is the key thing because that's a main component of some of the income that goes to the Saudi Saudi government. The Saudi government via the government itself, as well as the PIF, the Sovereign Wealth Fund, they own the majority of the Aramco shares, so the majority of that massive dividend goes to them. And it's over $120 billion for this year. We know that because they've already announced it going forward. They've got a component that's a base dividend, and they've got something they call the performance-linked dividend, which is taking all those bumper profits from 2022 when all the commodities complex surged after Russia invaded Ukraine. So oil companies were really banking profits at that time. So Aramco is distributing that as additional gains to the shareholders. Now, we don't know what they're going to do in terms of they've got plenty of scope for debt, so they could issue debt, giving them some additional cash to play with and transfer that to the government. Aramco has not talked about that, has not confirmed anything about that. But what we do know is their stated policy going forward. That base dividend, which is about $20 billion, that's going to be stable as a base, floor for what the investors will get. Plus, they expect to raise it over time. That special component of the dividend, the performance-linked, is going to be calculated as a percentage of their free cash flow after they pay out the main dividend and after they do investments. Now, in a few quarters already last year, even that base dividend was greater than the free cash flow. So already the analysts are looking at a lower free cash flow for this quarter and then going forward. So we're not seeing that there's going to be a lot of extra space for that base dividend. So based on the calculations that Aramco has given us, there's not going to be a lot of that performance-linked dividend. Yeah. So Aramco is either going to have to reduce that payout, rely on the base dividend, or think of another mechanism to transfer some money to the state.
Yeah, you remember when I sat down with Amin Nasser, the CEO of Aramco in Davos, I asked him a question about it. Obviously, he didn't commit to anything, but what he did say is, I just want to remind you, it is a performance-linked dividend. The second part of the dividend is performance-linked. So, i.e., if you're in a situation where they don't have the free cash flow to honor up that performance-linked dividend, then they might change the structure. So this is the expectation into tomorrow, I guess.
This is a possibility. Yeah, that performance-linked, they're clear that that's giving the upside to the investors, whereas they've got that stable base dividend, which, let's be clear, that's a huge dividend. That's $20 billion. And they are saying, again, that that's going to be progressive, meaning they hope to increase it, which they have done over the past few years. So analysts are looking at potential, a few different scenarios, possibly, as I said, some debt for something special or an increase to that base.
And just on the OPEC plus production front, obviously Saudi have been withholding barrels. We still don't know if they're going to put back these barrels in Q2 of next year, but how much of an impact is that going to have on the bottom line?
Yeah, for sure. That's hurting Aramco because they are in this price area where it's less than what they need to balance the government budget. So they're producing oil less than they normally would sell at a lower price. So of course that's going to be a compounded factor that's hurting them and hurting the bottom line.
Yeah. Anthony, thank you so much. Good to have you with us. We'll have you back on again tomorrow to discuss the earnings. Anthony DePaola, Bloomberg's Middle East energy reporter. Well, coming up, sticking to Saudi, PIF has temporarily banned PwC from advisory work in the kingdom. We bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, Bloomberg has learned that Saudi's public investment fund has temporarily banned PwC from advisory and consulting services contracts. The PIF did not explain the reasons behind the move in messages sent to its portfolio companies, but the firm's auditing projects will reportedly not be affected. Joining us for more on this, Matthew Martin, Bloomberg senior reporter for Middle East Wealth Funds. This story hit Friday afternoon, made a lot of waves, I would say, in the region, thanks to your reporting, Matthew. What do we know? Why did the PIF make this decision?
Well, I think just first of all, to put a bit of context around this, this economic transformation that's been going on in Saudi Arabia, this Vision 2030 master plan has attracted huge volumes of the strategy consultants and management consultants and advisory firms to come in and massively staff up inside the country, and also to put huge teams in Dubai flying in And they have been, I think it's fair to say, over the course of the last decade, have extracted billions of dollars in fees out of Saudi Arabia and out of what has been going on here. And I think, we're perhaps starting to see the first fruits of some of the backlash against that. And as the kingdom looks more at delivery and value for money out of these services, I think that this action against PwC is, as I say, one of the first things that we've seen. What we do know so far, and we don't know a huge amount at the moment, but what we do know is that earlier in February, the PIF sent out a message to all of its more than 100 subsidiary companies telling them to stop using PwC for advisory and consultancy work. Audit work is apparently going to remain going on. There's obviously only really 4 big audit firms, so to cut one of them out would be a big hit to the ability of companies to find different auditors. But so advisory and consultancy is going to be the main area that is affected here, and this ban is going to be in place for 1 year. So up until February of 2026, PwC is not going to be able to do any of this advisory and consultancy work around all of these big projects, which have been using dozens, if not hundreds, of manpower from consultants on areas like NEOM and on Alula and some of these big projects which have been spending billions and billions of dollars. So a huge blow for PwC, which has also, it must be said, had some issues around the world as well, and has run into some problems in places like China, which is also hitting its growth. And it had previously said that the Middle East was going to be one of its strongest growth markets. So that's clearly going to be challenged now over the course of this next 12 months.
Yeah, huge story. Matthew, thank you for bringing it to us. Matthew Martin, Bloomberg senior reporter for Middle East Wealth Funds. And coming up, has Dubai become a victim of its own success? An influx of workers is leading to a surge in costs and a moderation in salaries. We get the latest next. This is Bloomberg. Dubai's job market is being overwhelmed by an influx of foreign workers, leading to a surge in rents and traffic and a moderation of salaries and financial benefits for staff. For more, let's bring in Bloomberg's Verity Radcliffe. Verity, really good to have you with us. Has Dubai become a victim of its own success?
Well, we've definitely seen the population surge here. You must have noticed. We've had more than 400,000 extra people arrive since 2020. There was a big boost after the pandemic, and that's obviously having some impact on people's salaries and their lifestyles. There has been a bit of an impact on lifestyles here.
But at the same time, it feels as though authorities are trying to mitigate some of those issues. There are lots of infrastructure plans for road transport. Yeah. How are Dubai residents adapting to this higher cost of living?
There's some things that the government can do, obviously, and they build and build and build here. Just looking out the window here today, I can see plenty of cranes. Yeah. Dubai is always doing this, but just dealing with the scale of the extra people to house and to build roads for and office buildings, it's an enormous task. And yes, they are building lots of extra roads, but you must have noticed all of the traffic problems that we're having. The roads are gridlocked at certain times of day. It's terrible. So there's some things they can do, but I mean, residents themselves are doing certain things as well. They're moving further out of the city to cheaper places, moving to perhaps cheaper Emirates as well.
Like Sharjah,
Indeed, to Sharjah, to Ras Al Khaimah, or just a little bit further out of the city to further away developments, just on the outskirts of Dubai as well. And I mean, some people are also looking at alternative places to move to as well, perhaps Saudi Arabia, although even there, the hiring cycle has sort of come to an end. There was an intense activity, which seems to be slowing a little bit even there as well.
Yeah, it's interesting. We had Knight Frank on the show on Friday talking about Saudi real estate trends. So it's a similar phenomenon, I guess, sort of playing out there. But let me just bring it back to Dubai. Has this higher cost of living disincentivized expats from moving here, would you say? Or are we not at that point yet?
Well, there are push and pull factors. The reason why people have come to Dubai over the past few years has been certain push factors like wars, terrible economic prospects in certain places as well. So those things haven't really changed. And the pull factors, such as low tax regime and easy visa processes with the golden visas that we have here now, they still exist as well. So it seems like the numbers haven't slowed yet, but I suppose if the trend continues, you might see a change in the future, but we don't know.
Yeah, you forgot to mention the nice weather as well. I'm a fan of the sun, so especially this time of year. That's a draw, I think, right?
Maybe.
Bloomberg's Verity Ratcliffe, thank you so much for the reporting. Okay, a quick look at futures before we head out for the show. Markets are trading in the green despite all of the geopolitical developments, I should say, over the weekend. Even European markets looking to open up in the green as well. Take a look at Euro Stoxx futures up 0.7%. But that is it for our show. I'm Jumana Versace in Dubai with Jennifer Zabazaja in Johannesburg.